The bull market, which keeps on chugging. So how far can it really run? Let's ask Dan Greenhaus, Solus Alternative Asset Management's chief strategist, with me here at Post 9. Welcome back. Good to see you, and happy holidays to you.
Merry Christmas to you, and happy holidays as well.
You're pretty optimistic still about next year, right?
Yep, I am. Listen. We had a terrific run all year, a terrific run off the summer, off the October lows. Some give back into the end of the year was not what I expected. In previous shows, I talked about going out of the year at somewhere around 6,200. That obviously will not be the case, or presumably will not be the case. So I'm a little surprised, but in the context of what's happened, I don't think it's that big of a deal, and thus far doesn't really change my outlook for next year.
So what were you thinking was going to happen that didn't? Like, why do you think we're going to disappoint your high expectations to finish the year?
I thought, that, not obviously, but it seems like a lot of this has to do with the Fed meeting and the adjustment in interest rates, and the Fed seemingly suggests...
The hawkish cut.
The hawkish cut, if you will. That's right. And I thought that the market would have known that to be the case. And obviously, it was not. I mean, obviously, futures pricing was already looking for somewhere around 2 cuts next year instead of the 4 that we've been talking about for much of the year. And so the adjustments since then admittedly caught me by surprise. I don't think it's new news per se, and perhaps maybe the market is overdoing it a bit, but it does appear that the market wasn't as prepared for it as I thought.
The backup in rates, right? That's partly what we're talking about here. Because the Fed was more hawkish, the outlook is a little more hawkish. They're going to cut, but obviously less than we thought. Rates have backed up significantly from September when they did the jumbo cut, right? But if they're going up for the right reason, is that okay?
Yeah, listen, I think so, and that's been my position for many years now. This idea that let's just, I mean, to boil it down to the core of the issue here, it's not going up. The yields are not going up because there is some inflationary outbreak. There's obviously a concern about incoming president, former president, soon-to-be President Trump's policies, and whether that's meaningfully inflationary. That's a separate conversation. I'm not so sure it is.
Is it a separate conversation? I mean, that seems to be what the market and, frankly, what the Fed are both trying to figure out. I mean, the Fed has said as much, right? They don't really know what the impact of prospective tariffs are going to be.
Some Fed officials did seem to incorporate President Trump's policies into their forecast.
They're trying to.
They're trying to assess it. Listen, my view on this is twofold. One, taken on its own, tariffs are inflationary, for lack of a better word. However, there are other mechanisms in place here. Demand can shift. Which is presumably what obviously the goal of the tariffs are to do. You can have a currency adjustment, which perhaps mitigates some of the negative effects on prices with respect to tariffs. And I would also add, when you look back, and I'm a dead horse, but when you look back at the previous period of tariffs, yes, goods prices adjusted, but headline prices did not. And I think too many people say, well, there was no effect on prices because the headline number was down. It is true to say core goods prices, which had been declining for many, many years, ceased doing so, and actually...
But it's different this time, right? Because you're starting from a base of higher inflation than you were then.
Without a doubt.
And higher prices, let's be honest here, right?
Well, of course.
That's the bigger story anyway.
That is right. But I would also add a stated goal of incoming President Trump is to lower oil prices. And to the extent that, and listen, oil prices have already been coming down. Prices at the pump, gasoline prices, I haven't looked in a couple days, but last I looked were somewhere around $3 a gallon. Not great, but not terrible either. If you can somehow engender higher oil production, either domestically or more likely overseas, you can start to put some downward pressure on oil prices, which presumably would help out on the inflation front. So I'm not as universally negative as a lot of other people on the tariff side of things.
You say the consumer's fine.
Yep.
And you expect positive fundamentals to reassert themselves. The positive fundamentals being what? And how do they need to be reasserted if we already have positive fundamentals? Is one of the reasons why we're rallying, and we may have started another one here as the Santa Claus rally is beginning today.
That's right. So let's address those one by one, the consumer and then the fundamentals. On the consumer side of things, Darden just reported, Olive Garden, Longhorn Steakhouse, Chuy's, Yard House, a mall-based, anyone who's been in a mall knows Yard House. Darden had pretty good things to say about the consumer. That's our latest fundamental bottom-up look at consumer spending. Obviously, we've got tons of macro data that corroborate that. Everyone talks about about the retailers. We know Walmart and Costco, but the retailers in general, I prefer, with respect to the consumer conversation, to look at American Express, Visa, MasterCard, Capital One. All those stocks are doing pretty well. The commentary continues to be pretty strong about the consumer, and we know what's going on with the labor market. So I'm not at all worried about the consumer through the vantage points of which I view things. The fundamentals reasserting themselves, I'm saying right now the narrative that we have on the network and in these conversations is largely focused around the Fed and yields. And that is the dominant narrative right now. What I'm arguing is when the calendar turns and we start getting additional data and then eventually earnings season, those fundamentals, which I still perceive to be quite strong, are going to become part of the narrative, not the dominant part of the narrative. And we can move on from the Torsten Slot conversation about hiking rates.